Good day, guys. So, welcome to another trading tips, another trading strategy. And before we continue, like we always say, kindly click on the subscribe button. You could have been better than this, assuming you've done that before. Do you understand? So, click on the subscribe button, please. Click on the like and comment on the video if you have any question. And if you want to join my Signal room, I'll put a group. You understand? A group link there. And if the group is full, because we get so many issues that the group are full, you can just comment in the comment section and say you need a group link. We'll send the group link. Now, today we'll be talking about the candlestick range theory, which you guys always see as CRT high, CRT low 50%. And sometimes I see people doing this thing wrongly. But now, one thing about the model of this theory is all about just accumulation. It's more or less like accumulation, manipulation, distribution. Do you understand? Whereby the accumulation and distribution happens on the doji. That is the dragonfly doji. Let me use the word dragonfly doji. Or let me say doji. Because normally we all know that doji is they say doji is like indecision in the market makers, whereby the buyers are buying, the rate at which the buyers are buying and sellers are selling are kind of equal. So that doji, okay, for those that don't actually understand what doji means, we have kind of doji. We have the dragonfly doji, for instance, the dragonfly doji. We have the normal doji, which is the middle. You understand? Like, for instance, now these are type of doji, the dragonfly doji. This is another doji. Do you understand? But the psychology behind this doji is just that the rate at which the buyers and sellers around that particular period of time are equal to each other, which is more or less like the market is what? The market is what? Ranging. And in a ranging market or accumulating market, the thing you want to notice about is where your manipulation is going. You will be expecting a manipulation, you understand? Like this, you'll be expecting a liquidity. Then after the liquidity, you'll be expecting a what? A distribution, which means the price of the market will go in the opposite direction of the liquidation. Do you understand? So that is what this psychologically the meaning of this CRT is. Do you understand? All they just do is they find the high, the low, which is the support of the range. Then they use the high and the high of the range, the support and resistance of the range. So I don't know if you can understand what I'm saying, but let's just go to. I just explained the model very well now, and I'll talk about the common things to avoid when you do this. Now, when you're using this theorem, you just need 3 candlesticks. You understand? The first one, second one, third one. But most times you'll be needing the first and second. Now, these candlesticks are also sometimes called a reversal candlesticks, which are the morning star and evening star. And now when you see a morning star, normally back in the candlestick strategies, when you see a morning star or evening star, it's more or less like telling you that, okay, fine, there are higher chances that there happen to be a change in direction in market. So for instance, now, if you spot this particular, I think this is evening star or morning star, I don't even know. What matters is you understand the psychology behind, not the name they are giving it. Do you understand? Now, so if you spot this maybe in a support zone or resistance, or sorry, in a resistance zone. So let me use in a supply zone. In a supply zone, if you spot this, definitely you know that, okay, fine. There are chances that the market wants to change the direction from the bluish movement to the bearish movement. That is from buying to selling. So now, but in the CRT model, all what they are doing is just the movement of this third candlestick. And normally in psychologically, these third candlesticks in the reversal candlesticks is more like used for confirmation. They use this candlestick for confirmation that, okay, fine, that after the indecision in the market, we already noticed that the next candlestick, the seller took place, or if it was the buying, the buyers took place. Do you understand? So we can continue it selling here. But in this model, they are using this, so which is more or less like, calm down. This strategy is not 100%. It's not 80%. I will rate this strategy 70%. Nothing, no one can tell me 70%. Now, but the fact that they can take partial I will say I will rate it again 75%. Now, let me explain how this strategy works. Now, like I said, all you have to do is you draw a high candlestick. You look for a candlestick, for instance. The first candlestick, I'll be real. I will not be this kind of people that they will spot. They'll be looking for where it actually happens and they will start spotting. I will be real. So for instance, now I said it's a 3 candlestick. Now, maybe for instance, this has not actually happened. Maybe I'll now decide that probably I want to take this. I want to take it from this. I use it as my eye. I use this as my CRTI. And like I said, the CRT means the candle ratio, and I use this as my low. And I was expecting that, okay, the fact that price were pulling back, that was already showing what was it called, rejection, and I will not enter here. Can you see after? It's bought. Now, all you have to do normally is like wait for that candlestick. This is how candlestick finish, and make sure that the real body later ends inside, not outside the eye of the candlestick. I don't know if you understand me. You make sure it's ends inside. So for instance, now look at this. You will notice that, let me make it very, look at this. This theorem is all about liquidity now. You can see that, okay, fine. The price of the market came in here, ended with the real body inside the range. So this is more or less like the liquidity, the manipulation. You understand? And in this case, your targets should be like the 50, your first TP will be the 50% of the high and low. That is the equilibrium, the middle. You understand? Will be your first TP. Why second TP will be, let's say your second TP can be at the low. Your third TP will be below the low. I don't know if you understand what I'm trying to say. So that's how it works. So when you are using this theory, you have theory strategy, you have to be very, very careful and know what you are doing. Now, for instance, now let's come back here. And I drew my eye. I have to be patient enough for this second candlestick to finish and make sure the real body ends inside this range, making sure that the wick were outside. And we know that, okay, when there's a wick, it means that, okay, there are manipulation. That is, the market maker tends to push it up just to liquidate, and they are coming back, which means they are going in the opposite direction for a long time. So let's look for another one. Now, okay, fine. Can you see another one now? Can you see another one? This is the eye. Okay, let me label it the way they used to label it. So they used to label it CRTI. Why the other one will be low? And the middle will be what? The equilibrium, 50%. Do you understand? So in most cases, again, now, thank God I'm seeing all these things. Now, if you notice this kind of thing that is a gravestone doji that is at the tip, you can actually enter immediately. But now something like this that, okay, particularly maybe the hour candlestick end around this particular place. You understand? Like with a kind of, the real body is kind of big. Normally, me, I would actually expect, okay, for instance now, the fact that it's kept on, funniest thing that was like, it's kept on, it didn't actually end like this. It's kept on coming down like this. Me, I would advise that you don't enter. You wait for it to retrace, because if it doesn't spike here, if this candlestick was continuing like this, it will particularly maybe be this candlestick that will actually push it up for coming back, which like just wait for retracement. Let's see if I can see what's it called? Now, look at something like this now. This is the eye. So now, is this valid or this not valid? Forget the fact that it's actually happening. I will not take this. So at the end of the day, this is a 24. So, okay, another thing I have to say, and I didn't say before, was like, make sure if you are doing this strategy, you are using the higher time frame. Don't go and try this in a lower time frame. At least make sure you are trying from 4 hours time frame, 24 hours time frame. 1 hour time frame is not really that good, but you can still try 1 hour time frame. for 4 hours and 24 hours, just for you to know. You can use this model just for you to know your daily movement or your next 2 days movement. Do you understand? So that's that about CRTW, the CTRW. Yeah, I'm looking for another one. So now, like I was saying, this is one of the reasons why I said it's not actually like, I will not guarantee it 100%. Now, see. Okay, let me first see if it was a weekend first. If it's not a weekend, July July 24, because normally, yeah, manipulations in July 24. I'll check July 24 and 20, July 24 and 20, July 24 and 25 were Wednesday and Tuesday. So can you see one of the reasons why I said this strategy is not like, it's not 100%. I know there's no strategy that's 100%. Can you see? Though it still went, it's bought, you understand? But for if you were to enter here, this little movement again would have liquidated you. Do you understand what I'm trying to say? For a better result, make sure it always end inside this range back. This is more or less like the third law of supply and demand. So let's take few examples. Few examples, few examples, few examples, few examples. I can't use this because it didn't finish inside. Anything could have happened. Okay, now see this exactly. See this. See this. Okay, now there was a place I was actually explaining. Thank God, yeah, I can see it now. That's why I said we are different. We'll tell you everything we observe from a strategy. Now, can you see this was the high? This was the low. I'm talking about this green. The first. So the second one now actually happened and started coming. Now you notice this was the opening price of the second one of this third candlestick, but it started selling. It was later, I think later it spiked up. And that's what I was saying. That if it doesn't stop like a doji, wait for the next candlestick for it to spike. You understand? So at least to spike at least to the middle of that second, like 30 to 50% of the middle of this third candlestick. You understand what I'm saying? Before you join. Because now imagine you now joined the sell here. This spike or this spike is enough to take, I don't know, is enough to take people out. For those that are using smaller equity. You understand? For me, I'm considering everybody now. Smaller equity, big equity. Just wait for the spike. If it doesn't spike and it went like that, at least your funds are still safe. Take away the fear, take away the FOM, fear of missing out. At least your funds are still safe. You are still better than someone that entered and maybe you don't know because we don't know the market and it's just took out. You understand what I'm trying to say? Just wait for it to spike. If it is an heavy, like if the drop was an heavy drop, that I didn't actually give like a doji. Do you understand? If it didn't give you doji, wait for it to spike. Because at the end of the day, plus this, that's what the doji. That's the doji already. That is the rate at which you sell now. The buyers already took it back. I don't know, it's more like psychology. I don't know if you forget the formation of candles, just reasoning with the psychology. The rate at which it's dropped now is bought back another perspective of time, which means that from the doji started selling. And I was saying your 50 will be your this place will be your 50%, your TP1, then your TP2, then taking out TP3. Do you know it was after you took it out? I started what? As simple as that. So thank you very much, guys. So same thing applicable, but it's unfortunate that we didn't see that of low. Okay, this is one for low. I like the fact that the way I'm just saying it, I'm just saying them. For buying. This is CTRO, CTRI, CTRI, CRTI. Now, this is the liquidity of spin, any name you want to give to it. Then after I started buying, though in this case, this didn't actually spike down. I don't know. But let's go to a lower time frame. It should spike down in a lower time frame. You understand? Then boom, it took out the eye. That's it. So in short, what you should be looking for is look out for liquidity. The one that will show weak. That it will be weak, that will be there, weak. The shadow of the candlestick outside the range of the high and the low. Thank you very much, and God bless. So once again, just subscribe, like, share if there's need. And if you want to join the group link for free signals, I said free signals, just go to the bio. You'll see the group link there. I pray it is not full. And if it is full, notify us in the comment section that the group link is full, and we'll send you the new group link. Thank you very much. And God bless you all.